Yolanda, volatility appears to be increasing in the markets at this point, and with nice gains one day followed by losses the next. Why the uncertainty at the moment, do you think?
I think the reality of whether the sustainability in the run that we've seen in the markets is real, or has the market been buying future value, and we're looking at maybe the length of the recession maybe being longer than expected. So you're seeing a lot of investors taking profits at this time.
And of course, we have seen economic data coming out from both sides of the Atlantic, some of it good, some of it bad. Also seen lots of earnings coming out, and really, earnings really do dictate where share prices should be sitting. And do you think that share prices at these levels are justified, given the economic and the earnings picture at the moment?
I think looking, one needs to break it down into which sector you're really looking at, and depending on the sector, you can find value in different sectors, especially I think in your industrial sectors, which are going to be more profitable. If we're expecting growth to be for GDP to really kind of grow, if we expect recession to come out, that we will see a run in our industrial sector.
And of course, we had some negative data out of the US yesterday, but then we had those results out from Home Depot and Saks, some of the retailers, and that helping to prop up the US markets yesterday. So do you think the market's really just looking for positive news and kind of shrugging off the negative?
Yes, even if you look at the data, the housing data that came out, overall it was negative, but the single home numbers, which contributes to 75% of the housing new starts, was higher. So they really focused on that amount, that data, and they looked at Home Depot, which is your largest store in terms of your DIY, and they took that and just ran with that.
Well, of course, here in South Africa, we're waiting for results from retailers as well. Starting from today with Truworths, we've also got ShopRite next week and Massmart next week. And Truworths expected out this afternoon, and they're expecting a 10 to 15% rise in profits. So for a clothing retailer, that doesn't really look bad in this current environment, does it? No, it doesn't. And I think the market as well, in terms of the results we're seeing, are very much in line with expectations. The numbers, the CPI numbers, the PPI numbers, we know that consumers are under pressure. So, these numbers are going to be reflective of where the consumers are. In terms of your more defensive retailers, you will see ShopRite should come out with better numbers. Massmart will be under pressure because of its exposure to its non-durable goods market. And if one really looks at the apparel sector, your cash retailers are most likely to perform better than your credit card retailers. So I think very much in line with the expectations. I don't think there are going to be too many surprises. It'll be interesting to see when they come out. Of course, we did have results out yesterday afternoon from the JSE. Revenue up 7%, operating profits up 9%, and it's really benefited from increased foreign flows into the markets. And we have seen foreign investors coming back into the South African markets over the past few months, haven't we?
Yes, we have. If one looks at the actual results, you'll see that derivatives were down 20%, equity volumes were up 20%, and they saw a growth in terms of revenue of 130% on their Yieldex. I think in terms of the long-term structure and projects that they really want to put in place, if we expect volumes and revenues to increase in the next 2 years, if we do see continued foreign investment into emerging markets like ourselves, I think the JSE is going to perform quite well in the next 2 years.
And of course, it does have that merger with the bond exchange, which is going to stick under its belt in the current period, isn't it?
Yes, and I think it's part of one of their projects that they want to do in terms of filling up the derivatives gap that I mentioned just now that came down 20%. So I think it's good to keep an eye. They've run quite hard from their Feb and March lows. So you saw a bit of profit taking today on the day, but I think still a good buy into the next year.
And we had those growth figures out yesterday, a 3% contraction in the second quarter of the year, down from a 6.4% contraction in the first quarter, and just slightly better than the market was expecting. What's Nedbank Capital's view of the recovery? Where are we in this? What stage are we in of that recovery?
Well, Nedbank has a V-shaped view for their economy in terms of us being a commodity-based economy. We think that, we're going to run, quite, I don't know if we're quite at the top at the moment, but we should see that, as a reality of the recession kicks in and we see the effect of consumers really coming through and spending really not coming through, that we're going to see a come off, and then once we see real signs of the recession coming off, we should then climb again.
Of course, we have seen some signs in Europe and of course Japan, of some of those countries, Germany, France and Japan, as I mentioned, starting to recover. The global recovery, do you think that it's lagging perhaps those three countries?
Sorry, Stephen, were you asking if we were going to lag compared to those three?
As lagging, but also countries like the United States perhaps lagging those recoveries that we have seen in Germany, France and Japan?
I think the US is going to lag more than your other countries because, with the States being, 70% of their GDP, unless we see a real turnaround in those numbers from the States, we saw the negative numbers coming out in terms of housing starts coming out yesterday. We really need to see a continued growth or positive numbers. Employment numbers cannot reach 10% in the States in order to see that recovery. So we really need to see those numbers coming through.